I wanted to ask you what caught your eye on energy to begin with.
Oh, when something's topping out, there's always something else bottoming out. And
Yeah.
I do a weekly outlook on every week. So every week I chart all the different indices, I chart all the sectors, and I chart all the commodities. So then every week I start to learn how, I always say the market tells a story, it never leaves, it just flows from one thing to another. So
Yeah.
you do that, hundreds of times, and you start seeing, oh, that went up, oh, that went down, and you start seeing the relationships. So yeah, knowing energy and looking at where, similar kind of times, and the Shiller P ratio is the second highest it's been since the tech bubble. So then if you go back to times like the tech bubble, you start looking at, okay, well, what performed after the tech bubble popped and things like that as well. So yeah, and that I'll share a few of those charts today showing that literally energy is down at those same levels it was back, and the exact date was January 3rd of January 2000. So we're back
3rd of January
down,
2000. Okay.
yeah, which
Yeah.
is pretty much the very beginning of the
.com.
.com, yeah.
Yeah. Deja
So
vu.
yeah. So yeah, I just tracked a few key ratios which I can share with you as well, and just saw the change in market structure, saw the divergence, which means that it was a weakening trend coming down. And that's how I trade. I look for a weakening trend, and then I look for the confirmation of a change in market structure, and that's it. And then I buy.
Okay. Cool.
Yeah.
Some of the things that we're going to cover off today are what are the trends that we're seeing? What are the different types of energy? What are the linkages between energy and the economic growth in the market? The future forecast for energy demand, what we can learn from history, how is the energy sector performing, and
Mhm.
what are some opportunities that you're seeing? All right, so we'll get kick-started. So what are some general observations to begin with? And one of the things that I've noticed, I love charts. A picture is worth 1,000 words. And so what this chart shows is from the 1800s until the present day, energy consumption over time. And the one thing that I've noticed is energy never drops.
No, it's the heartbeat of the world, really.
It doesn't drop.
Mm.
And I love the chart. If you look at from around about 1950s onwards, there's three types of energy that basically rules the world, and that's natural gas, and that's oil, and that's coal. And that makes up the bulk of pretty much all of the energy that we kind of consume.
hmm
In the stuff that you've been looking at, I know everyone's talking about energy, renewable and green. It's all like cool and sexy, but are you seeing much activity happening in that green renewable space?
There definitely was, but it definitely went into that excess phase. All right, you can clearly see that it was topping out, which is
Mm,
yeah, well, what I noticed at the end of 2021, 2022, and also then when I started posting some bearish things around it,
hmm.
just how, like, it wasn't even that people disagreed with me. I literally got attacked. I got abused. I got banned from multiple Facebook groups. Like, I was like, it was like I slept with their wife. It was
Oh,
terrible. And that's when I'm like, okay, that's definitely a top. So
yeah,
whenever, because it's in that euphoria that no one can believe. And the funny thing was, all the things that they were telling me, I'm like, I already knew that back when it topped out in 2018. Like, I'm not hearing anything new here. Okay.
yeah,
It's like, it's already been priced in. And that's the thing. The market's forward looking. All the reasons that they were talking about was priced in. And
yeah,
that's why the stuff had 100x and had 30x and 50x. Nothing moves up that fast. And that's what people have to remember. And that's what I kept trying. I'm like, doesn't mean I'm bearish on it. I think, yes, it is a mega trend. A mega trend is something that will go on for decades and decades.
yeah,
But, nothing goes up in a straight line. There's going to be ups and downs along the way there. So, yeah, people think it was kind of like,
that's
you know,
funny.
within 1 year, there's going to be a million Tesla stations up and everyone's driving around in new cars straight away. And yeah, but no, it takes time,
Yeah.
especially big changes like that. It takes a lot of time. So,
Infrastructure's slow. It's not like software. You can't scale out a
no,
whole bunch of
no.
charging stations everywhere. And the cool thing about this chart is if you look at the green renewable space in the top part of the segment,
Hmm.
Like it still doesn't compare to natural gas. Like you
No.
combine wind and solar and hydro, it still doesn't equal natural gas. It still doesn't equal oil. It still doesn't equal coal. And
Hmm.
so when I look at this chart and how steep that curve is from like the 1940s onwards, like our energy consumption is growing at a very high rate. And when you think about like countries and India coming online, the growth that we're seeing in these renewable energies isn't keeping up. And so
Hmm.
what's going to happen, I think, is people are going to keep using the tried and true sources of energy like coal, oil, and natural gas. And because demand is going to be very high, prices are going to have to give and go up.
Hmm. Hmm. Agree.
Mm. Ready to move on?
Yep.
Okay, so going into the next chart, what this chart shows is electricity consumption versus income per capita. And we've plotted a whole bunch of different countries on this chart. And the interesting thing is there's no such thing as a low energy and rich country. So pretty much any wealthy country, if you look at the blue dots, the wealthier countries, they're
Hmm.
all heavy consumers of energy because it,
Hmm.
it basically drives everything, transportation, manufacturing, absolutely everything. Um, do you watch other markets or do you mainly watch actually, do you do anything with emerging markets?
Yeah, I do. I definitely watch Asia. I watch
Asia?
India.
Yeah,
Yeah, UK, like not as much, like more kind of the emerging markets. I do watch a little bit,
yeah.
but yeah, I wouldn't know anything about Mexico and Poland and yeah, not really much about the European markets and that. Yeah.
Oh, well, I look at some of the countries in the low energy consumption, like Somalia and Sierra
Hmm.
Leone. A lot of them are African countries. They've still got an awful long way to go before they're actually developed. Like you go there and the roads aren't great, the infrastructure's
Mm.
not great, the ports aren't great. So there's still a long way to go. But if you start to look at countries like Pakistan and Bangladesh, the countries that are close to India, they're starting to develop really, really soon.
Hmm.
And the fascinating thing, if you look at that curve, like the more developed a country gets, the more energy they start to consume. And if you go back to the previous chart, it just reinforces this chart as well. Like
Hmm.
consumption is going to keep rising. Okay, so energy and primarily where energy sits as a percentage of GDP. Um, you mentioned before, was it 2000
Yeah, January
when there was a
2000.
peak? And that was when it was relatively unloved?
Hmm.
Okay, gotcha. So even in 2000, when energy was relatively unloved, it represented about 4.5, maybe 5% of GDP. Whereas now, it's unloved relative
Oh
to
wow.
NASDAQ. It's like 13% of GDP. So that's actually a considerable difference. Um,
Wow, yeah, I didn't even. Yeah, that's crazy considering that. I might jump on and show you the ratio actually right now, and you can actually see.
yeah, go ahead.
Um, so yeah, if you look, this here is the XLE is the energy sector against the Nasdaq,
Yep,
and you can see here when we're down here, that's the 3rd of January 2000,
yep,
and then it topped out GFC.
yep,
So we had obviously commodities and energy had that massive run up to the GFC. Since then, we've had a low interest rate environment. Tech growth has thrived. Energy has been an underperformer.
yep.
But now look where we are. We're back down
We're
to
back
those
there.
levels where and yeah, this is what I thought when we first had that first higher low out of here.
Hmm.
Yeah, looking to see if it starts to come back up again. But yeah, it's just the fact that we're back down at those same levels again. Yeah.
Yeah. I love buying assets like that, like
Mm.
like really unloved assets at macro cyclical low levels. Um, and just having the patience to buy and just hold and ride out the storm.
Yeah, that's it. I was telling a couple of people about the other day. I was like, I've got a friend that doesn't even know how to read charts. He just knows when stuff is undervalued and knows when stuff is overvalued.
It doesn't
And
sound hard, does it?
no, that's it. And it's just, and he doesn't get the day of the bottom or the week of the bottom, even sometimes the year of the bottom,
Yeah,
but he gets within a couple of years of the bottom and gets out within a couple of years of the top. And that's why I put that post on Facebook today about the balloon.
yeah,
I'm like, if you know a balloon is so close to popping, yeah, you might get a few more puffs in. Awesome. But why would you even risk it? Why
Why would
would
you
you
risk
even
it?
risk having those few puffs when you
Yeah,
can, when there's one that's not even been touched yet, that has so much more growth ahead of it, that's no risk whatsoever of popping, you know? So, and it's not like these things aren't going to keep going up as well. It's not like the money's only going into NASDAQ.
Hmm.
So, you know, just why even go there? You know?
Yeah.
It's like why date a married woman when you can date a single woman? You know, why even take on the baggage along with it?
No comment. No comment. Not an area where I have any expertise
Me either.
whatsoever. Um, okay, so if I go back to this screen, okay, so we kind of know now that at a global consumption, like energy consumption has gone up over time historically. But if you look at the future forecast of where we are and where we're going, we need to double, more than double the amount of energy that we consume between now and 2050, which is kind of scary when you think about it,
Mhm.
because a lot of the energy sources are non-renewable resources. Where are we going to find that energy? More than double.
Yeah, uranium.
And that's what I think the answer is too. Yeah. Like if you go back to this chart and you go, how the hell do you more than double where we are right now on this point, over
Mm,
160,000, I think it's terawatt hours, which is immense. Like none of these things are scalable. So biomass,
mhm,
which is wood, is not scalable. Coal's not scalable. Oil's not scalable. Natural gas isn't scalable. All of the green energies haven't proven to be scalable yet.
mm,
Nuclear is the only one, I think, that can bridge that gap. And so,
mhm.
like you, I'm kind of excited. What got you interested in nuclear?
Oh, yeah, just the again, I just know everything goes in phases.
Yeah,
And you, you know, if you invested in uranium since the GFC, it's been a terrible performer. It's
oh, it's a bit
been
ugly.
absolutely ugly.
Yeah,
Okay. And obviously, a few things happened, like some nuclear meltdowns and that. And it really turned a lot of countries and people off it.
mm,
But then it was in a downtrend, a strong downtrend, and then it went into a sideways trend.
mm,
And after that, it had a very clear beautiful five impulse waves up, which is the beginning of a trend. And what I saw is on that move, a lot of volume started to step in, which is when big money started to accumulate. And this whole last 2 years that it's been like, I don't know if you remember the peak last time of uranium around that 2021, and it was like the Wall Street boys were, but you know, and it was in that euphoria excess phase of that one wave.
yeah,
Okay. So then it needed to pull back. It needed to make dumb money forget about it, which it did. It went sideways for 2 years, it declined down, but that was happening on lower in volume, which is accumulation. So I knew it was in a pullback. The problem is it's really hard to know exactly when that pullback finishes. It's
mm,
a lot easier to know when an impulse finishes than it is a correction, because there's so many different forms of corrections and blah 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 blah. But yeah, so I always knew it was correcting. I was just waiting for that thing, and when it finally broke out of its wedge and changed its market structure, the volume started to pop in. It just, yeah, started to pop up. So just, to be honest, just the chart. And then
yeah.
once whenever a chart looks really good, I then start diving into the fundamentals. And then, yeah, went down that rabbit hole. Same thing. I'm like, energy's a problem. Renewables, everyone's talking about renewables. Uranium is actually the only working solution.
It is.
That's the thing. It's the only working. So if they want to scale it and scale it
Mm,
quickly, it is really the only solution. So yeah, that's what really brought my attention.
yeah, I agree. And the thing with uranium is it takes a while to get a nuclear power plant up and working.
Mm-hmm.
It's not something you just press a button, ta-da, you've got a
Yeah.
nuclear power plant. So it's going to take a couple of years. Um, and until that happens, energy is going to be a constraint until that happens. So the
Mm-hmm.
cost of all of the other types of energy is going to increase. It's going to have to increase
Mm-hmm.
simply because the consumption over the next couple of years is going to be so high. Do you have a chart, by the way, that shows where uranium is now relative to where the last point it was undervalued?
Yeah. So
I
well, the
love how
main
quickly you can pull charts up.
so let me just pull up. So this is what I was talking about. Yeah, so this is 3 monthly candles. So every candle's a candle. You can see it was terrible, which is what I was talking about.
Yep.
And then we went into this sideways move. Let me just move closer down. We went into this sideways move. Accumulation, accumulation, accumulation. And then what happens is anyone that was buying off that support, they give up if it breaks again. Oh, damn it, it's going lower again. And that's what's called a spring. It's that
Yep.
final capitulation moment, that final, this thing's never going up. And whenever something is going sideways for a long time and then it breaks out and comes straight back within again, it's always a blue sign. Same thing at the top. If it ever goes sideways a lot and goes up and then comes back, which is exactly what happened on the Russell 2000 back in of 2021. Same thing. That's what's called distribution. So, they've been accumulating this thing since 2016. And this is what I was talking about today. I'm like, the macro is never wrong. It's just, it takes time.
It takes time.
People were talking about uranium being, you were talking about uranium being bullish
Years ago.
Years ago.
Years ago.
You were right.
Yeah.
You were 100% right.
Yeah.
But
just early.
sometimes early. Sometimes you just got to wait for it. And same with tops. Like tops happen, but they don't just, like, people think, when you're calling these things that it happens in a day, a week, or even a year. It takes years sometimes because most of these people have been investing since COVID, when they're used to a 1 month drop in thingo, they get a bargain, they're rich. That's not how it works. That was like a once in a lifetime opportunity that I doubt will ever happen again.
Not in our lifetimes.
No. So yeah, and you can see here, this is what I'm talking about here. So you can see, just you always, like, the easy way I like to explain it is picture like a man walking downstairs. So you can like literally picture a man walking down, walking down, walking down, walking down. Then you kind of go sideways, down. Then all of a sudden there's a man walking up a mountain. That's when then the trend has changed. It's not going down, it's going to sideways, and then starts to move up. And then, this is what I was talking about with the volume and things like that, is that volume just started to massively come in.
Oh, wow.
Yeah, like look,
that's the blue line.
The blue line there. So this is what's called on balance volume.
Wow.
And what it shows you is that when this blue line's going up, it shows you that the green days have more volume than the red days. When it's going down, it's showing you that the red days have more volume than the green days. So it's showing you buying pressure or selling pressure. So it's just an easy way to identify the volume. And you can see this thing just started to shoot up.
That's
and it's
huge.
It's already gone ballistic. So things like that. And you can see, this is going up, and see how the price is going down here, but the volume keeps going up. That's what's called divergence. That's going down, that's going up. They're not doing the same thing.
Yep.
All right. So that was what I talked about, where I knew that was corrective. I just needed it to break out and start to trend again. So to me, this is downtrend, accumulation, beginning of uptrend. We actually haven't even hit the public participation. It's still the early phase to me. It'll happen once we break here. Once we break this zone here, that's the beginning of your wave 3, which is your public participation. That's when you'll start seeing it all over the news. People start talking about it on the streets, stuff like that. It'll get a bit kind of blow offy, it'll get a pullback, and then you'll get the massive excess phase. So yeah, that's how I invest. I get in on after the wave 2. I get in at the beginning of wave 3. that's the thing, because that's where the money is made there. All right. So yeah.
I think that you just articulated the difference between technical and macro. So macro, we can spot the trend, but quite often it's too early.
Yeah.
Whereas the technical, you actually see the breakout in volume, you see the divergence, and that's when you get in. And so you actually have less opportunity cost than I do.
100%. And that's why for me, if I had to choose between technical, macro, and FA, I would use TA number 1.
Yep.
And then macro. And then for me, fundamentals is the last thing. It's like, well, once, like you said, once I saw the chart was good on uranium, once I saw the macro was good on uranium, I then start looking into the fundamentals, because that's the stuff that takes time.
It takes a lot of time.
Yeah. I don't want to go and invest my time diving down this rabbit hole if it's not actually worth my time.
Yeah.
So it's almost like a cheat code to kind of know, it's like a filtering system.
Yeah.
Rubbish, good. And then I can find stuff quickly,
Yeah. That's a good analogy.
Yeah.
So macro is kind of like, am I in the right city?
Yeah.
Technicals is like, am I in the right suburb? And then fundamentals is, am I in the right street? And
Exactly. Yeah,
and you,
diving right down.
yeah, okay, awesome. No, thanks for that.
Easy.
I think I learned something there. So when price when the price is moving down, trending down, but the
Mhm.
volume is divergent and moving up, you see that as a bullish sign.
Yeah, so corrections, these things here,
Yeah.
always happen on lower in volume.
Okay.
And that stems back from Dow theory. It was always like volume should confirm the trend. So this
Mm-hmm.
was going up, volume was going up,
Mm-hmm.
good. This is going down, volume wasn't matching it. So
Mm-hmm.
it wasn't increasing with it. So that's then go, well, that's a weak trend. So then that's showing that's correction, and then it starts to trend again. And
Okay.
that's how I'm able to pick tops quite well, because when it gets up to that excessive phase, what it ends up doing is it starts keep going up, but on lower
Yep.
in volume.
On long
And that's
volumes.
when, you got the retailers, your mum and dad, people that, buying $1,000 here or there. There, you can know that it's not actually big money buying it up. And that's how you can start to see the trend go the other way.
Yeah.
Yeah.